Howdy out there, folks. This is Darius Dale here to present our macro minute for Wednesday, March 16th, 2022. Starting with markets, we have stocks up this morning, commodities mixed, crypto mixed, dollar down, global bond yields up. Big news this morning, we have China's Financial Stability and Development Committee. They had a meeting that concluded there is a need to boost the economy and promised investors relief on several regulatory fronts. Obviously, real estate being the number one focus of macroprudential tightening of late, or easing rather. The government should actively reduce policies that benefit markets. That was one of the statements that came out by Vice Premier Li He. That's their top economic official over in China. This is not the first time Li He has tried to calm investor fears following a market sell-off. He came out and said the exact same thing in 2018, and we didn't see any sort of large-scale easing initiative on the other side of that. So be aware that this might be a short-term head fake, but obviously in the near term, we have Shanghai Composite, MSCI, Emerging Market Index up 4% a piece on the news. Bitcoin and Ethereum only up around 2%. I would have expected to see a little bit more juice there if we did see a big shift in China's if this rhetorical shift in Chinese policy had any teeth to it. So this is something we're gonna have to study over the next few weeks. On the macro front, yesterday's February PPI data out of the U.S. economy contained incremental evidence of easing supply chain disruptions. While at face value, this appears to be a positive development for the stock market, it actually may portend a negative earnings revision cycle upon further review. So, unpacking the data, headline PPI that came in unchanged at 10% on a year-over-year basis. That's pricing power for suppliers for other companies. Core PPI, we did see that slow to 8.4%. That's the lowest since November 21. So some of that supply chain pressure coming out with respect to core PPI, less trade services, that also slowed to 6.6% year over year. That's the lowest point we've seen since October 21. So again, that spread is indicative of easing supply chain disruptions there. Taking it to the chart, this is something we started talking about back in the fall, October, November, where we said, hey, look, we do believe we're passing the peak of supply chain disruptions, and we've seen that confirmed in the ISM data. If you look at the report, the percentage of respondents reporting slower supply delivery times for either manufacturing or services were well off the highs for both. That's exactly what we're seeing here. One thing I call out is that easing supply chain disruptions, you think that's positive for the stocks, positive for corporate earnings. But again, we've been at 16% for S&P 500 operating margins on a 12-month basis. That's 200 basis points higher than any previous cycle peak. So you could have an earnings recession just to get back to the cycle peak. And one thing that could catalyze that is obviously a dissipation of the supply chain disruptions that have allowed companies to pass through costs at a pretty record clip, obviously very record clip as it relates to corporate earnings. So this is why you're seeing guidance. Negative guidance is the number of companies that are issuing negative guidance, which is the highest print we've seen since 2008. So we're going to get an update, obviously, Q1 earnings season, but I do believe Q2 earnings season sort of reported throughout the third quarter of this year is going to be really telling in this regard. So stay tuned for all this. A lot of stuff ahead of us from a macro risk management standpoint. Today's probable range setups, S&P 500. That is bearish from the perspective of volatility, adjusted momentum signal, 9.2% of downside versus 2.2% of upside in its probable range. WTI still neutral VAMs, minus 11% of downside versus 31% of upside. Bloomberg Dollar Index bullish VAMs, minus 1.2% of downside versus 1.5% of upside. 10-year Treasury yield still bullish VAMs, minus 36 basis points of downside versus 14 basis points of upside. Bitcoin bearish VAMs, minus 17% of downside versus 4% of upside in its probable range. Ethereum bearish VAM still as well, minus 18% of downside versus 4% of upside in its probable range. And then lastly, gold neutral VAMs, minus 3% of downside versus 7% of upside. So with that, Darius Dale presenting our macro minute for Wednesday, March 16th, 2022. Best of luck out there today.